Ming Ming Inc. Today we will be talking about the daily swing model. Now, this model was derived from an ICT space where he talked about this specific criteria happening, and I'd like to share it with you. Now, what you'll be looking for in a bullish environment, you'll be looking for a low followed by a lower low followed by a higher low. I'm talking about your daily time frame. 3 consecutive candles, a low, a lower low, and then a higher low. Obviously, it's going to be vice versa for bearish. For bearish, you're going to be looking for a high, followed then by a higher high, followed then by a lower high on your daily time frame. Doesn't matter where the candles are, you just want to specifically look for this criteria to be checked. Obviously, the environment has to be in your favor. Now, you're probably wondering what days of the week this works. So this is going to work on Monday, it's going to work on Tuesday, it's going to work on Wednesday. Any other day of the week, Thursday or Friday, don't really want to focus on it. You'll be looking for trying to get the weekly distribution. So on Thursday and Friday, the weekly distribution is more than likely met, and the model won't be in your favor those days. So once you have this criteria checked, you will then go on your lower time frames. I'm talking 1 minute, I'm talking 5 minute, 3 minute, 15 minute, whatever works for you. You will then go and wait. You'll wait for 9:30 market open. Once that has occurred, you will then look for a breaker, an order block, and or a BC or a CB. Now you want to look for the first one that occurs. That is your entry. However, this model only works 70% of the time. 70% of the time, you'll be banking, you'll be moolah, bags of cash around you, boom shakalaka. 30% of the time, you're going to be upset, you're going to be hitting the streets, you're going to be putting the fries in the bag. This doesn't happen every week, it doesn't happen every day. That's why I said 70% of the time. Also, it doesn't happen every week. It's based on your daily time frame. So you have to wait for every day to come to a close to then reevaluate. Will this model work? Will it won't? Now we're going to get into some examples. Examples here, you can see on the lower end we have our BC on the weekly, and we have our buy side up above. Now this was taken in November of 2023. This is a full bullish environment. We are, I think I remember it was Q4. We have just turned bullish, anticipating distributions on the monthly, distributions on the quarterly. So this is a bullish environment. You have the swing low right there going into the BC weekly, dictated by that little red arrow. You have the low, the lower low, and then the higher low. Now the candle that took the buy side is the candle you want to be trading on. Here we are. This is the lower time frame. This is the 5 minute. So if you go in and look, 9:30 open. We have a FEG right there, and we have an inversion. So the first FEG, or the first inversion. We also have an order block that price reacted with before 9 o'clock, but that does not meet our criteria for the model. We also have an IFEG that was reacted off around 8:30 a.m. Eastern, and that is also not our criteria for the model. Now obviously, I'm going to show you a bearish version. So you just flip it upside down, it's easy as that, invert it. You guys kind of get the point. I mean, if you're watching these videos, if you're watching my videos, you have a basic understanding of bearish, bullish environment, entry techniques, order blocks, breaker blocks, fair value gaps. You guys know the basics. obviously inverted, turned upside down. But here, actually, I have a bearish example for you guys. So this example, here you have the opening of July. You have an anticipated rally for 2 weeks going into July, and then you have a drop. Now, once we see that drop, this is when the bearish environment comes into play. So this is July of this year. So if you look, you have the high, you have the higher high, and then you have the lower high. Now, if you look at the candles to the left, what is that last up close candle? The daily order block. So once you have the criteria met, we can go in on the lower time frames. So we have liquidity lower, we have the time opening of the monthly lower, because we're anticipating for the current quarter in July to go lower. So here we have the criteria met. Look, 9:30 open. We have the first fair value gap. Entry into there, drop down. We have another fair value gap during the silver bullet. And then we have an order block, and then the price delivers right at 1600 at market close. Right on the time opening of the monthly. So, I hope you guys understood. Hope you guys kind of got the gist of the video, got the gist of the model. Remember, it doesn't happen all the time. You need to be fully onside. If you're offside, you will know very fast. Anyways, outies.